Hi everyone, I hope you people are doing great. I am Punya Aggarwal, ACCA affiliate co-founder of BeingACCA, and we are starting with the debrief of your section B of AA pre-December 2024 mock. So I will be explaining you the questions, the case study in detail. I might not be writing all of the answers or not might not be discussing all of the points, but I will make sure that you understand the question really well and then you can frame your own answers as well. So let's start. So the first case study that we have relating to this particular paper is your Oogway company, which is basically related to the audit of Blossom and Company as the auditor to Blossom and Company, Lotus Company, whatever question number you want to call it. So let's start. First, let's read the first question that we have, and then we'll move on to the case study to understand the case study really well. Okay. So first question says, describe 8 audit risks and explain the auditor's response to each risk in the planning of audit of Lotus and Company. So this is a 16 marker, which means that you need to write at least 8 points and maximum 9 points. I know that a lot of, people actually tend on writing more points in order to secure more marks, but I think you should not exceed more than 9 points in this particular case study, because ultimately then it's just sheer wastage of time, and in audit time is money. Time is very very important, right? So let's now read the case study to be able to understand it better. I'll also be highlighting it. One thing that I always do, I used to do it when I gave my paper, I'm doing when I also take test series at being ACCA for AA and AAA students, is when I gave them this approach that because time, we have time crunch in AA. So while you are reading the case study, you also copy paste the risk that you are able to identify and paste it over here. I'll show you how to do it so that it's ultimately once you read it, okay, then you go on to the answer, then you reread the case study to find the audit risk. It just dual efforts. So rather than doing that, we will be copy pasting simultaneously so that we are able to frame, because then our draft answer would be ready and then we'll be able to frame the answer. This type of a table will always be there in your paper, and in the pre-December mock also this was there. I have not created this particular table. Okay, so let's start. It is 1st of July 2005. Okay, you are an audit supervisors or of O and Company, which has recently been appointed as auditor to Lotus Blossom Company, Lotus, and you're planning your first audit, which will be the for the first audit, which will be the for the year ending 31st of July 2005. I got my first risk. So people who have got were able to identify this risk, very well done. So just put one, copy paste, move next. Okay. The audit engagement partner had a meeting with Crane Wing, Lotus finance director, and has advised you for the following. So now a question starts. Let's see. Inventory is valued at lower of cost and net realizable value. This is absolutely the right thing. There's no risk over here. Cost is made up of purchase price of raw materials and cost of conversion, including labor and production overheads. Fine, nothing in this as well, right? So you need to see, whenever we are reading the risk, you need to be careful in understanding that not every liner in the case study will be a risk. Many people have seen, I've evaluated few scripts of pre-December mock only, where they think that where because they are not able to identify any risk, they write that the labor and production overhead should not be included in the cost. Why? They are part of your cost, right? The finance director has reviewed the inventory valuation policy and has decided to include some additional overheads this year as they consider them to be production related. Again, now here is the risk that we have identified. The finance director till revenue related, the production related, because what is the risk over here? I'll also discuss it. What is the risk over here? That there's a risk that the additional overheads which they are talking about over here, they are not actually related to the production process, due to which our inventory can be overstated, right? Now, one common mistake that most of the people do is, see, I have identified the risk over here. Rather than just copy pasting the exact line from the question, what they do is they copy paste the entire paragraph into the question and then they start on writing there is a risk. Okay, this is a straightaway wrong approach of answering. You only need to, because here you won't be getting any identification marks. Why? Because the first line and the second line were not actually the risk. The risk only was third line. Why are you giving an examiner? Why are you giving the examiner an option that he will decide which is the risk over here? If he has to find out the risk from this particular paragraph, why he will or she will give you marks for the same, right? So you do not need to copy paste the entire paragraph, rather just copy paste the exact line from the question, which is this. Okay, let's move forward. Inventory is held in two main warehouses close to the manufacturing facility. Do you think this is a risk? No, absolutely not. I know people would have identified this also as a risk. Why is this not a risk? Because they are ultimately close to the manufacturing line. The company can have as many as warehouses, right? How is this a risk to the financial statement? The company plans to conduct full inventory counts at the warehouse on 29th and 30th of July, and any necessary adjustments will be made post year end to reflect movements of the inventory occurring on 31st of July. Now, here we have the risk. Here, what risk do we have? We have cutoff related risk. Okay, we have cutoff related risk over here. Fine. Next, during the year, okay, I'll just mark it. Again, same thing is there that in this paragraph, only this part was the risk. The first liner was actually not the risk. So we only copy pasted the line which was related to the audit risk that we have identified. Next line, during the year, while calculating the depreciation, directors extended the useful life of plant and machinery from 3 years to 5 years. Again, this is our main risk. Why is this a risk? Because there can be a scenario. We have to always depreciate as per the IS 16, right? It should be always as per IS 16 and the criteria as per IS 16. And IS 16 says that we need to see if there is a potential case of depreciation, or there's a potential case wherein we need to increase the useful life of the asset. And we also need to analyze the rationale behind it, right? And so that is the reason. So maybe there is a risk that the company is actually not following IS 16, and due to which there will be overstatements and understatements, whatever, right? So this is our risk over here. Fine. Okay. In this case, if we see, if I just quickly tell you what will, so we'll discuss the risk in detail in once I read the case study. Okay. The company receives a trade discount from one of its main suppliers, which is fine. This is not a risk, right? Bamboo company, which is linked to the total amount purchased during the year. Okay, great. The amount is reclaimed post year end in September 2005 and is based on the actual volumes purchased during the year ended 31st July 2005. So there can be a risk that, because our discounts are based upon the amount, upon the volumes that we purchased till 31st of July, and these are claimed after 2 months or after 3 months in September. So there can be a scenario wherein the volumes were actually lower or higher than this, and due to which our receivables will be impacted, because trade discount is directly linked to your receivables and the amount that you need to pay to them, right? So, okay, during the last month, it has become clear that Lotus will reach the volume required to reclaim this discount. So it is clear that we will be reaching the volume of discounts required. So it's fine. The finance director has advised that they are expecting to include a receivable in relation to the trade discount of 0.9 million at the year end, along with a corresponding entry in cost of sales, as the discount relates to goods which will have all been sold by the year end. Okay, so now they are recognizing a 0.9 million discount as a trade discount in their receivables, which can be a problem, because there can be a scenario wherein our receivables are overstated because of the same reason, right? So you need to be a little skeptical over here. The auditor has to be skeptical regarding the trade receivable discount. Now, a lot of students, I check the mocks of the related this to provision, or the related this to the inventory. This is not related to inventory or any provisions that we need to require. Provisions is required in case when there's an outflow of something. Here there's no inflow, there's no outflow. We're simply claiming a discount. If your purchases were, let's suppose, say for 100 rupees, now you are getting it at 80 rupees. So there's a discount of 20. There's no inflow or outflow of cash. We simply need to relate this to our receivable balance and our basically our receivable balance and the trade discount balance. Okay, so okay, the risk over here is this one. Yeah. Let's highlight. Okay. The directors need to meet a target profit before tax of 1.5 million in order to be paid to their annual bonus. Again, this is an issue. Why is this an issue? Because directors can window dress the profit so that their bonuses increase. Very, very common fraudulent activity can be done by the directors. Okay. Next, in May 2005, the finance controller of Lotus was dismissed. Okay. So now, abhi tak koi risk nahi hai isme. Let's move forward. He had been employed by the company for over 20 years and he has threatened to sue the company for unfair dismissal. So he has threatened the company to sue for unfair dismissal. This is our main risk. Okay. So if he has threatened, maybe there is a possible outflow due to which we need to recognize a provision. So there should be, as this should be recognized as per IAS 37. If it is not done, then the provisions will be understated, right? Okay, the role of finance director. Okay, now here, if you see till here, we had one risk which we have already identified. Now the other risk, let's see. The role of finance controller has not yet been filled, so his tasks have been shared between the existing finance department team. Okay, this is again a risk and it is a separate risk than this. I have seen people, clubbing this risk and this risk. This risk relates to that it has not been filled, so there may be a possibility that the finances are not going as per the scenario, and the receivables is a problem. There are bad debts in the company, irrecoverable debts in the company, because there is no finance director in the company, finance controller in the company. Your credit controls can be impacted because of the same reason as well, right? So let's highlight this portion as well. Okay. In addition, the purchase ledger supervisor left in March and a replacement has been appointed last week. However, for this period, no supplier statement reconciliations was performed. So again, a major risk over here. Okay, so I'll write down the extra risk also. I'll show you that in every question, I think I mentioned this previously as well, that, in every question, sometimes students come up to me and say, ma'am, it was a 16 marker. We technically had to write 8 points, but I was not able to find any risk in the question. Like I was only able to see 5 to 6 risk. Always, there is, in every case study, if they've asked you 8 risk, there will be at least 10 to 12 risk in your question, right? So every time, this will be the case scenario. So like here, this is the 9th risk that we have identified. Okay. Okay. Lotus payroll function is outsourced to an external service organization, Harmony and Company, which is responsible for all the elements of the payroll processes and maintaining payroll records. Again, this is a risk. What risk does it relate to? Detection risk. I'll explain the reason why. So now I have made my draft answer, right? This is my draft answer. Now I just need to frame it better, write better points. I've already read the case study, right? So I'll explain you by writing one or two of the risk, and then you can of course frame them on your own. So let's suppose this is the first one. Of course, I've copy pasted. You cannot write your, right? So this is the first audit, which will be for the year ended this, right? There is an increased detection risk as the auditor might not be fully aware of the company's opening and closing balances, might be new to the industry in which the company is operating. Okay. So this is my answer. Now here I have see what is your risk. What is your risk answer contains of? What does it consist of? First thing is this is a division. See, audit risk for auditors you'll get 1 mark. For auditors response you'll get 1 mark. Now this audit risk 1 mark is divided into 0.5 marks and 0.5 marks. 0.5 marks is for your identification of the risk. I have identified the risk well or no. Here I identified from this particular paragraph that there's a risk in this particular paragraph or this liner. So half a mark I got. Second half a mark is for your explanation in terms of the standards, in terms of the overstatement statement, relating them to the financial statements. So the next thing I have written is about the risk. So half a mark gone, right? So this is how you need to divide that. You get half a mark for identification, and next half mark you get for the explanation of the particular risk that you have identified in the question. Okay, now responses, again, very, very simple. Nothing to worry about the response. I think this is the easiest of all, right? You just need to say about, you can talk about the professional skepticism that they may need to maintain. Sorry for the spellings, I'm just writing it faster. Then you can talk about, they need to have teams, the audit engagement teams should be well informed about the industry and the environment in which the company is operating, etc. Right? So this can be your responses. So your responses will be very specific to the type of risk that you have identified. Okay. Next risk was the finance director has reviewed the inventory valuation policy and has decided to include some additional overhead. So in this case, there is a risk that additional overheads do not form part of production related. Sorry for my be typing, but it's just related costs, and therefore, because of this, our inventory can be over. Right? Simple. Very, very simple. Now you just need to just write the explanation. We have one part of the answer ready. We just need to write the explanation. Similarly for this, similarly for this. You just need to write, the basic, explanations. Let's see for this one. He has threatened. So, not writing he, finance director, or who did threaten? Who threatened us? Finance controller. Financial controller has threatened to sue the company for unfair dismissal as per IAS 37. Now you also write the full name, okay? Provisions, contingent liabilities, contingent assets, etc. A provision should be recognized in this case if the outflow of funds is probable, right? If this has not been done, then there is a risk that provisions are overstated and profits are overstated. Simple, right? Now, what will be the response for the same? Here you can write, discuss with the legal administrator regarding the claim being successful, or you can also write it with the management, discussion with the management or the legal administrator, whatever. So this is how you actually need to write your answer. I have written the identification from the question risk. I also included the relevant standard. I also included how it will impact my financial statement. So this is how you actually draft your risk procedures, and then you write the responses. Right, I hope that you people have understood. If you want me to explain any particular of them, which I think while we were reading it, I did explain them. But if you still need that, I'm open to it. You can comment down below. So we'll discuss those risks as well. Now coming to the next question that we have in this particular case scenario is about the substantive procedures that we have. Okay, let's read the question first. Okay. Describe substantive procedures the auditor should perform to obtain sufficient appropriate evidence in relation to director bonuses. And this is a 5 marker. So that means I need to write 5 points at least, and maximum it can go up to 6 pointers, right? Now first see from the question, see for substantive procedures, again reiterating, if you are writing general substantive procedures, because of course you would have learned the substantive procedures for director bonuses, you won't be getting marks. Like if you are writing all the substantive procedures as general, out of 5, maximum 2 marks can be obtained for the general ones. Rest, you need to be very case specific. Case specific, how will you be case specific? Is reading the question from where did they identify this particular substantive procedure. Okay, so let's see from where did they identify this particular substantive procedure. Okay. Yeah. See, this line is there. The directors need to meet a target profit before tax of $1.5 million in order to be paid for their annual bonus. Now, I will be using this amount to be able to relate to the substantive procedure, okay, of the director bonuses. So let's draft two substantive procedures, and rest you can write as per rest write as per you. The first one could be, what I'll do is I will be compare profit before tax of how much is it given? $1, 1.5 million, okay, which is used in bonus calculation to the final profit that I will be having, profit before tax, basically PBT, in the financial statements. Why? Now I need to tell, see, यहाँ पे you need to write a verb, you need to write the source document, then you also need to write the reason why. Right? Verb I use compare. Compare is the verb. Source document is about the PBT and the calculation part which I need to obtain from the final profits in the financial statements. And why I need to do this is because to confirm if there was any adjustment required in their director bonuses. For example, if the previous in the draft financial statements, the previous was the profit before tax was $1.5 million. Maybe in this thing, the profit increased or decreased. So I need to do an adjustment to the bonuses also, right? So this could be one of the potential, the substantive procedure that you can write. Another substantive procedure potential you can write about the board minutes. You can review the board minutes to identify if there is any additional payments that you're making to the directors of the company in terms of the director bonuses, right? So this can be a potential another example for the same. Then you can also discuss with the management. See, yahan pe, because of course our profits, they need to make a target profit of this in order to be paid for their annual bonus. So this is directly a self-review thing, right? Self-review, not self-review, I'm sorry, self-interest threat, right? Of course, that you don't have to write. I'm just explaining you the concept. But how can you frame a third substantive procedure is you can discuss with the management the rationale behind there's why there's a linkage between the profit before tax and their annual bonuses. Right, because there can be a risk that we have already discussed the risk that there can be a risk they're increasing the profit before tax in order to increase their bonuses. So you need to discuss with the management the rationale behind that, why is the annual bonus linked to the profit before tax of $1.5 million, right? So this is how you can actually relate your substantive procedure to the case study. And I have discussed three, rest two you can write the general ones, but do not forget to write the name of the case study in those particular general ones as well, right? Let's move forward with the next question. Okay, let's read. Okay, it is now 2nd November 2005, and the audit of Lotus company has been completed. So now it is completed. The auditor report was signed in October, okay, and in line with O company's quality management procedures for new clients, a post-issuance review has been carried out. So I hope that you people know about the post-issuance review. If not, please revise it. During the review of Lotus audit files, the engagement quality reviewer noted the following. Okay, so there was some issue. During the audit team became aware of a breach of data protection regulation, whereby an employee of the company has made its customer database available to a third party. Oh my God, okay. So there was a data breach wherein he gave it to the database was transferred to a third party, the customer database, which is a huge thing, okay. This disclosure is in contravention of the regulation. Of course, the audit working papers refer briefly to the situation and conclude it has little to do with the audit and no one outside of the company is aware, which is a very, very, very wrong statement done by the auditor. No further investigations were made by the audit team, and the audit manager noted in the working papers that the matter does not need to be discussed any further with the Lotus management team, as I have reviewed assurance that the person responsible for the breach of regulation has been dismissed. Okay. Dismissal is a later on thing, but then problem has arisen. So we first need to see what can be done for the problem that has arisen, right? To reduce sample sizes used in the test of details, the samples are selected based on judgment rather than statistical methods. It should always be on statistical method. You cannot judge on on judgmental basis, because your judgment can be wrong. You can pick wrong sample sizes. Some of the important large sample sizes could have been left behind, right? In addition, only parts of the population were being tested, was sampled. For example, certain locations were not included in the sample of non-current assets selected for physical verification, which is again a huge error. Okay, now let's read the question. The question is saying identify and explain the quality management deficiencies in the approach adopted by O&M companies. That is a 5 marker. So a lot of things you can easily mention. 3 I have highlighted. You can mention a lot of things. Let's see what all you can talk about and then we move ahead with the next question. Again, this question can be a little challenging for the people who think that, oh my God, what could be the answer for this? Because this is something new which we have not previously done, right? But the concepts remains the same which we have already done. So for the people who are very good in memorizing and they remember the relevant ISAs, you can refer to ISA 20 regarding the regulations part, the data breach part. Okay? But for the people who do not remember and for people like me who do not remember ISA 520, it's absolutely fine if you're not able to relate as per the ISAs. Okay. Now how do you explain it? First of all, we can talk about that the auditor, because here the major concern is regarding the auditor, because he has done so many wrong statements. He has told so many wrong statements over here in the audit working papers. So the auditor should have ensured that you are getting full knowledge and understanding of the relevant data protection regulations and laws. Right, this was obtained. They have to obtain the regulate the understanding, clear cut understanding of the same. If this is not being done, then they won't be able to identify how much of the data protection regulation they have breached, right? So this should be the first step of the auditor, that they are getting an understanding of the data protection laws and regulations. Okay, this has to be done by the auditor. Then next thing they should have done, they should have obtained about the nature and of the circumstances of which this particular case scenario occurred. कि किस case scenario mein, why it was the customer database available to the third party, what happened, what was the circumstances, etc. So basically the circumstances in which this particular breach happened, you also need to discuss it with the management and the person who was concerned with this particular breach, right? Then also next third thing, the most important thing that you need to do is about the procedures. You have to have relevant audit procedures in place to be able to identify and discuss with the directors and the management. Here they're saying that no further investigation were made by the audit team because the matter does not need to be discussed any further with the management. Why? They need to discuss it with the management to be able to get full information. Maybe this is half told information. Maybe this was actually this was outside the company, nobody was aware. Maybe everybody was aware of this, right? This can be a huge problem for the company. So you need to have your relevant procedures in place to be able to navigate through and understand what the breach was all about, right? So when we read this, we also got to know that they have failed to obtain any relevant investigations and failed to obtain any information from the client as well. So you need to again, so all of these liners individually you can talk about them. Then the auditor was they told that they do not have anything to do with this particular breach. They did not obtain information. They did not do any procedures. They were little concerned. They did not discuss it with the management, the directors, because they felt that the assurance was fine. The audit, also the who did the this part, audit manager. Audit manager did not have enough information about what kind of procedures to inculcate in this type of a situation. All of these could have been discussed very easily. Now this is regarding your first paragraph, which is about the data breach. So you can talk about a lot of things in just 5 marker, but of course you do not have to talk about a lot of things. Do not exceed more than 5 to 6 pointers in this particular case scenario again, right? Then talking about this particular sample size, again, huge issue, because your sample size, sample size should be selected on and on only on statistical basis, because then we can miss on certain important areas of, samples. We can have samples which are not relevant and does not make any sense. So we have to, because judgment is always not, relevant and cannot be always correct, right? It can be misused. It can be, because judgment for you, some sample size can be one thing, for me sample size can be different. So it has to be always scientific, has to always be statistical. So you need to discuss upon this area as well. I hope that you understood the case study, you understood these two questions as well. Okay, now let's move forward to the last part of the question. I mean the last part of this particular case study, which is question number 18, and this is of 4 marks. Very easy, very direct, knowledge-based question. I hope that people were very comfortable with this. Just let's quickly discuss it and then we'll wrap up the video. ISA 260 communication with those charged with governance provides guidance to auditors in relation to communicating with TCWG on matters arising from the audit of entities' financial statements. Right? Of course, you always need to connect with those charged with governance and discuss if there's any findings in the audit procedure during the audit, before the audit plan, during the planning of the audit, whatever. Right? So the question is asking us, explain why is it important for auditors to communicate throughout the audit with those charged. So why should the auditor communicate with the TCWG? See, you can write a lot of points over here. I'll give you 2 to 3 pointers over here, which you can easily write. Sabse pehle, you can write about that they can gaining information, insights about about potential findings, right? Whatever during the audit. So findings can be your during the audit, it can be during planning stage, it can be after the audit. So the TCWG will help with the auditor to identify and tell them, okay, this is something which is very, very crucial for the audit, or this is something which is a major finding in the audit, or something on those lines. So this is through this, you gain an information regarding the same, right? Then the second thing you can write is about that you get also the TCWG can help the auditor to gain information and insights regarding the structure of the company, or the nature of the company, or the environment of the company, or the entity as a whole. So they also get to, if because here our company was new to this particular customer, right? So TCWG can also help us out in to understand what is the entity like, what is the environment that they are working upon, all of those areas as well, right? So this can be done. Then a very, very important thing which we need to consider over here, that there should be a two-way communication between the auditor and the TCWG, because in most of the case scenarios the TCWG is only coming up to the auditor and telling them this is wrong, this is right, whatever. Communication is there, but very, very important it is that there is a two-way communication, and even auditor is reaching out to the TCWG and telling them, hey, this is a problem that has arisen, this is something I need your advice on, etc. Right? So this was a knowledge-based question. I try to explain you how, rather than just learning, I just try to explain you how can you better form your answers. And then to give two examples where, of two examples of the situations which can be communicated to the those charged with governance, is about the planning process approach. See, this is how we are planning to approach the audit of this so and so company. Then you can talk about the key risk which is being identified during the planning stage of the company, the planning stage of the audit. Then you can talk about the significant difficulties, significant challenges or circumstances which have arisen during the audit. Or you can talk about the suspected frauds which is happening in the company, and talk about to those charged with governance, right? So there can be a lot of pointers regarding this. A lot of discussions can happen with those charged with governance. But these are some of the examples which I've told you. I hope it was helpful for you. I hope you understood the case study really well. You understood your mistakes if you did any. If you've already solved your pre-December mock, this mock is really very, very important and will actually help you out with a lot of understanding, a lot of areas. So thank you so much for watching, and I'll be coming up with the next question very soon.